As we step into 2026, India's stock market is standing at a clear inflection point. The past year for India's stock market wasn't easy. There were sharp sector rotations, global uncertainty refused to fade, and returns for investors were anything but uniform. So the question investors are asking right now is, where do markets go from here? According to Axis Securities, the next phase of the market story won't be driven by easy liquidity, but by earnings, domestic demand, and execution on the ground. And that shift fundamentally changes how investors should think about 2026. So what does the market outlook look like for the year ahead? In this episode of Market Special, we break down the brokerage's New Year picks, but after a short break. So why does Axis believe 2026 is different? Because Indian equities, according to the brokerage, are now entering a new phase. Until now, domestic liquidity has played a major role in supporting markets. Going forward, returns will hinge far more on corporate earnings growth, policy alignment, macro stability. Axis Securities has set a base case Nifty target of 28,100 by December 2026, valuing the index at around 20 times December 2027 earnings. That reflects both optimism and restraint, because this time, this won't be a straight line rally. So why is Axis still constructive despite global uncertainty? Because India enters 2026 with strong structural tailwinds. Stable political environment, continued financialization of savings, improving fiscal discipline, a consumption-led growth model. Yes, global risks remain. From US Federal Reserve policy to geopolitics, global cues will continue to influence flows. But Axis Securities expects domestic demand recovery to be the primary engine of growth in 2026. Against this backdrop, Axis Securities has identified 5 key investment themes for the year ahead. Financials, benefiting from credit expansion and rate cycles. Consumption plays, riding India's domestic demand story. Selective cyclicals, positioned to capture the commodity upcycle. Healthcare, offering a defensive cushion. Multi-cap exposure, balancing ample mid and small cap opportunities. So which stocks fit this framework? Axis Securities' New Year picks for 2026 include State Bank of India, Varun Beverages, Hindalco Industries, Nippon Life India Asset Management, Dalmia Bharat, Astral, Affle 3i, Healthcare Global Enterprises, Mold Tech Packaging. The brokerage recommends a buy on dip strategy with a minimum investment horizon of 12 months. 2026 may not be about chasing momentum, but about picking the right businesses in the right sectors at the right price. With earnings taking center stage and domestic demand doing the heavy lifting, Axis Securities believes India remains one of the few large markets where cyclical recovery aligns with long-term structural growth. But remember, volatility hasn't disappeared and stock selection will be crucial. If you found this explainer useful, don't forget to follow for more such market insights.